Good afternoon, everybody, and welcome to Live Market Analysis ASX edition. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia. It's a pleasure to be with you as we delve into the depths of your portfolio, decide what to keep, what to turf out, and maybe even find some new ones to add in. A very interesting time in the markets. Before we get to that, just a little bit of housekeeping. It's Ask Me Anything about any of the stocks in your portfolio or beyond. Head over to your chat window there on your Zoom if you're watching me in that Zoom, or any of the streaming services, that is YouTube, Twitter, Facebook, or LinkedIn. Hopefully I won't be as tongue-tied as that for the rest of the session. Let's head over to Amy Broker. I know I always say this at the start, why Amy Broker? It's just the one I use. Okay, you've got your own charting platform there. Anything that gets you prices, and importantly for me, candlesticks, exponential moving averages. You're pretty much going to be in the ballpark for what I need to do. Volume, and this one down here is the average true range, and it is one for a very specific reason. And people say, hey, that's a bit weird. Average true range 1. Why not 14, which is the typical? Because that's not what I'm interested in when I'm looking at. Looking for stocks to buy. I'm interested in average true range when I'm setting my stop loss potentially, but not when I'm looking for stocks to buy. I'm looking for spikes in volume, basically. Spikes in volatility as well, but spikes in volatility and volume, that's what the ATR is giving me there. And I want one period. I want to see what was the volatility on the day. I don't want to average it out. Okay, first one, I'm going to head to the Zoomers first, and John was first in there, very clever, with STX. And that's the chart on screen. So the deal today is I'll give you my best technical reader, then we'll head over and see if we've got any fundamentals from the Thomson Reuters spreadsheet. Strike Energy. Short-term trend. You can hear me pause. My brain's thinking, do I like this? Straight away my brain starts to sort of give it a score out of 10. Is it something I'd be buying? Is it something I'd be holding? Is it something I'd be selling? And just so you know where my eye looks first, and I'll just draw a box over it. So that's where my eye went. Okay, so I kind of tell you the other way around. I say, look, start with the trends. Light green zone, short-term trend; dark green zone, long-term trend. And I think maybe because subconsciously I've picked that up very quickly because of the colors. I think that's what's great about these trend ribbons is you get these really vibrant colors that just smack you in the face and tell you. Almost subconsciously, okay, short-term trend, long-term uptrends. Okay, so we can think about going long. And then my eye gets drawn into this area here, where the second thing I'm looking for is price action. And we can see that the price action isn't great. And what I'm talking about there is going from peaks to troughs. So the peak is the highest point between the short-term uptrend and the short-term downtrend. The trough is the lowest point between the short-term downtrend and the short-term uptrend. There's a short-term downtrend on this side and a short-term uptrend on this side. And you're going to get a point of demand in between, otherwise known as trough. And then when you have, for example, on the other side through here, we have our short-term uptrend on this side. And we've got a capitals, and that makes this a point of supply, which is our peak. Okay. And what I can see here is that the points of supply are lower, which tells me that supply, therefore, must be increasing in the market. And the points of demand are also higher. So demand is increasing too, but in terms of the distance between the points of supply, they are greater, I believe, than the distance between the points of demand. So I think supply is starting to win the battle through here. The other thing that bothers me about this are the candles, and in particular, I'm noting the black candles through here, and here. And whilst the responses to those aren't terrible at all, I'm just getting the feeling that Strike is starting to lose the battle a bit. Okay, and that's all. And it's a bit, it's not a lot, but I'm getting a little bit more concerned. When I see this sort of a pattern, I start to look at the points of demand and say, well, there was demand in and around this zone. I know it was came in through here, and therefore, if we were to get beneath that demand, I think that would be disturbing. Okay, so demand is people putting their cash on the line, saying Strike is the stock I want to own. Supply is people saying, look, I don't want to own Strike anymore. I'm going to give you my shares and I'm going to take cash and go do something better with it. Okay, if that supply builds too much, we will take out the demand that was in the system. And once that demand is gone, as I said, it's concerning. If it's not there anymore, what does that mean? If you've got a vacuum of demand and we can see supplies building, what does that mean for the price? Well, it means that there's an increased probability of the stock going down. So that low there, 43 cents, I'm concerned about. And I would say if we see a close less than 43, then I would manage my risk. And I do feel that there's reason to manage your risk prior to that. So I would say just for safety, straight up, this is my view. It's not, you can do whatever you have to do, but I'm just going to go just based upon what I can see, now minus 1/3, and then on a close beneath 43 cents, I'm going to go another 1/3. And some people out there will say, hey, Carl, look, I think that's a really big mistake because, you know, Strike's a great company. It's got great gas reserves over here in WA. That market is, the prices are rising, it's booming. And, you know, it's completely an undervalued company with undervalued assets. And really it'd be foolish to sell Strike right here. And I say, well, that's all wonderful information. But I would say, looking at that chart, there are some investors out there that disagree with you, and they're voting right now with their shares. You might be holding on. Okay, you're not voting yet with your shares, but there are other people out there that disagree with you, and we're seeing some excess supply or signs of excess supply in the market. So first and foremost, the message is there. Look, don't confuse a good story with a bad chart. Let us head over here to the Thomson Reuters Refinitiv Icon spreadsheet, or at least most of the spreadsheet is theirs. Quite a bit of it is mine. In fact, really anything on that side is mine. But what Thomson Reuters is good at is surveying big brokers, big research houses, the smartest of smarty pantsers out there analysing companies. In fact, we have 4 of them that cover Strike Energy. And we get their consensus estimates. So what consensus means, many people agreeing. Not really sure if they do agree. It's just Thomson Reuters taking an average of the estimates that they receive from these brokers for revenue, gross income, EBITDA, so on and so forth. And then we've got, based upon those numbers, some ratios down here as well. We've also got historical data in the bag, and we can see historically, Strike has been a little bit of a flip-flop in terms of earning a profit. That is expected to continue at least until next financial year. So really that is until June 30, 2024. And really it's only in that financial year ending June 30, 2025, we're going to make a profit. But from there, the profit is expected to increase substantially. Now you can see we've got some NAs over here because you can't get a compound annual growth rate can't get a compound growth rate when there's a negative starting point. So we need to go to 2025, in fact, and get a positive one here. And obviously from here to here, we've got massive growth. So we get a crazy big number like that. And I'm going to say that my spreadsheet's going to have a hard time valuing this simply because those earnings are so far out and because that earnings growth rate is going to be so huge. And my spreadsheet's going to say, well, if you have a growth rate of 180%, which is substantially greater than the market's average of 8%, and you've got a forward PE of 29.8, then you in theory should be very, very cheap. But I'm going to stop there and say that this is a crazy number, obviously, to apply to something for now. Okay, even if it is a few years down the track, and I've discounted it heavily as a result. Even if I change that to high, we're going to still get some crazy numbers in there. And probably 30 is the wrong value for this anyway, to be fair, because it's, you know, a 10 or a 15 even might be the best way to go. In fact, if we do that, then, you know, we get a number like 50 cents as a target. But I don't want to guess too many numbers in here. Okay, I don't want to massage this until we get something reasonable. I just want to show you how some of the options work, and that's up to you to do that guesswork. Okay, we've got a few there. They are coming through from the chat, are they, Nick? Okay, no worries. I'll keep an eye on the chat. I've got the chat window open so I can find those. Let us head back to the AMI broker here. And I'm going to actually just pause on that because I did want to cover something that came through on the Twitter yesterday, and it was a request for Boss Energy. And I said that just out of my own interest, I would look at the uranium stocks. And I did that, and I was actually quite disappointed, unfortunately, for the uranium bulls out there. And maybe we'll preface this by heading over here very quickly and just having a look at the uranium price, which is coming up on screen in a second, or maybe it won't. If I do something else, it will. There it is. Okay, there's uranium. I have to refresh that, so that's making a bit of a fool of me. Technical difficulty here, sorry. A little bit of a glitch there with OBS, very frustrating feature of its functionality there. Let us go here and go to a line chart so it's easier to see. And now you can see the price of uranium. So the excitement over the last week or two in uranium stocks, or some of them at least, has been over this little blip up. And you'd think there was a huge move in uranium prices, wouldn't you, given how much some of those uranium stocks have moved? But actually, really noticed a move in the spot price from about 51 to about 53.50. A welcome move after such a long period of consolidation, and a move in the right direction as well, which certainly, based upon technical analysis, could continue to develop, because short-term trend, long-term trend, all both up. And typically out of these consolidation phases, when you break to the upside, that's usually a good sign. And it's not unreasonable to start to think about a 55, maybe a little bit around there, or potentially even a 60, and that could certainly change the economics of many of these uranium projects, of which Boss is probably the most or the closest one to production at this stage. And therefore something like a spike up to $60 would certainly help them. We can see there that the short-term trend is up, the long-term trend is up for Boss on screen now, and the candles and price action are looking pretty good. So we can see that through here, we do have rising peaks and rising troughs. I can see that the last area of demand there in that last trough, did come in roughly at or around the second from last peak. So showing us that the old point of supply there appears to be, a little bit spongy, but acting as a point of demand. The candles are very good. So I like these white candles through here. And then we've got some supply coming into the market around 280. And this is previous scratchings. This is not necessary scratchings for today, but you can see there in the past, if I move that, you'll see where the shadow comes in. That is an almighty supply zone, as I've labelled it in the past, and let us extend that across. And we can see that the almighty supply zone is indeed having a little bit of an impact on the current price. So a few people there probably wondering, oh, Boss Energy, hit 280, it's pulled back. Why is it pulled back? Well, there's your reason. That's exactly why it's pulled back. It's been an area of supply from the past, and areas of supply in the past tend to act as areas of supply in the future until we can overwhelm that supply with demand till we take out a little bit, we take out a little bit more each time we get in there, and we stay around that level until we've got rid of it completely, okay? And then we're able, probably after another little consolidation, maybe a couple of candles showing white bodies, lower shadows, and then pushing, turning this green zone again from an area where we have seen a little bit of supply into an area where we're now seeing demand. And let us change that color so we can see it in there, and change that back again to that. So what do I need to see? The candles that look like this, I need to see them coming in. That one there with the lower shadow pointing down, and it's going to change its color in a second. And its best buddy is this one here, and we call these our demand side candles. Okay, demand side candles, or our demand buddies as well. And if I start to see those candles popping in around that green zone, and we don't see too much of a pushback into that point of supply, then I think it looks good. Actually, it looks quite good. The only problem then, once you have gone through all that work, think about how hard that's going to be, probably for Boss, then you hit this other, and whilst this was an almighty point of supply down here, let me put that one back in just so we don't forget it's there. while that is an almighty point of supply around there, this one I've labelled as a major point of supply that you have to deal with next. So it gets us to the point where we make a decision. So we've done the analysis and we say, look, there's some very good things happening there for Boss. I'm going to give it a very warm 6.5, maybe even a 7 out of 10. Okay, it's going to get upgraded if we can put in those candles. If we can then break through that point of supply, which that top of that area there is 276. Okay, so this is point of supply. I think it was 2.76, so close above that would be a really good step in the right direction. And then it's going to get downgraded because in terms of reward to risk, you're going to bash into, if you're buying at 275 and you've got a big problem at $3, how excited are you about that? And I know I've probably spent too long on this because it's not something necessarily that I'm going to tell you to buy. I can certainly get to a hold, but I don't think it's a buy for the reasons I've discussed. But I do know there are people out there who are obsessed with Boss Energy and think it's going to be the most amazing company going forward as uranium prices rocket to $1 million a pound. Now, $2 million a pound, sorry, uranium bulls. I should have got that right. We do have 4 estimates for Boss Energy on the Thomson Reuters spreadsheet. We have 2 strong buys and 3 buys. I forgot to tell you what the strike energy ratings were, but you can go back in the recording and find those. In terms of the EPS line, which is where I like to go next, we can see losses after losses after losses. That's because it's a company that is trying to get itself into production. Makes sense, but we're actually expecting a profit this year. Well, that implies to me that they're already mining. I haven't caught up on this story lately. Apologies. So if this is true, if these 4 estimates are true, and 4 is not an insignificant number of estimates, we do have some earnings, and those earnings will be growing into the future quite significantly, quite substantially so. So if I change this back to FY23, because we're going to get some numbers out, we get the most amazing growth rate of 84% per annum. I don't know enough about the Boss story to tell you whether that's a high, low, or medium risk, but it is a mining company, and commodity prices are volatile. For that reason, you might want to just work more with a moderate risk rating than a high risk rating. Does it deserve to have a PE ridiculously high? Well, geez, I've lost my my formula there, which is not good. So I'm going to have to undo. It's not going to let me go back because now if I change this, it's not going to change because I've typed that in. Okay. All right. They're going to have to kill that one. Start it again because I need... don't save it, start it again. So I need my formula in there. There you go. Back to BHP's default. I'll let it load up and we'll go to Boss Energy. That was a rookie mistake, wasn't it? I should put a formula on it and protect that cell, really. That would be the smart thing to do. So we go back to Boss Energy and we've got the, change this back to moderate. That is correct. And we can see here that with a PE of 24 times, which is the median through, I'd say through here, if I'm not mistaken, then it's looking extremely cheap. So it's saying that the price could be as high as 546. Okay, the brokers actually have a price target of 328, so it's still allowing 21% upside. I'm not sure if I'm comfortable paying 24 times earnings for Boss Energy even with that potentially amazing growth rate, but I'm not going to muck around with it any more than that. Okay, so I don't think the broker's estimate's unreasonable, and I think my valuation is probably up towards the very top end. But it does rely on the most amazing growth going forward. Okay, so is there anything in that spreadsheet, however, which is telling me not to buy Boss Energy? No, I don't think so. I think actually the valuation is quite supportive of buying some Boss here. But until I get the candles, that's not me just yet. Okay, so that's certainly the most popular one at the moment. The second most popular is Paladin, and there was certainly Boss Paladin buying there for a while. I'm guessing Paladin operationally hasn't hit those milestones that Boss has hit, because there was talk that at Langer Heinrich there in Namibia, they'd be trying to get back into production and off care and maintenance as well. I suspect that hasn't occurred, and I don't need to go and check out the company's news updates or ASX releases for the last 12 months, because correct me if I'm wrong, somebody in the comments, but I don't think that's occurred. I think they're still very much a long way away from getting into production, because I can see that on the chart. There's some good stuff here though. but not good enough to get me in. Okay, so this isn't bad. This is actually pretty good. And then we've got this through here, which is a support zone, and we've come off it pretty well. I do see some demand in there. Obviously, there's a bit of pesky supply, but we're trading up towards the top of that range. I think we can get some supply in here though, and that could be, well, it could be a problem. It's certainly a reason for me not to rush out and buy it just yet. I can certainly get to a hold here. I think that's the message. I won't spend too much more time than that. I think it's you're a happy holder on this one. But not a buyer just at this stage. Where would the hold thesis stop? I think if you start to break back below this low here, and particularly this low here, and I'll give you a number in a second, then it would become a manage your risk. And given the strength of that long-term downtrend, it's probably not just a -1, that is probably a full exit, and go do something better with your life and your money. And if you've been holding Paladin for any period of time, you're not offended by that statement. You probably are feeling like you should have done something much better with your life over the period of time that you have been holding this stock. And that low there's 59.5. So I would say if you are close less than 0.595, and I'll go -1/3, but you might well want to do a bit more than that. How or where would it become a buy for people who are Paladin faithfuls and truly believe that this is going to be the next big thing? It's got a bit of work to do for me. So up here. It's got to do some work in there and get through that, and really putting in the right candles. I might even have a think about it, because the next major points of supply probably are a little bit of a ways away here. So maybe there's the next big one there. So you might be able to make it work on a reward risk basis, but hardly anything to get excited about on that. I'm not going to look at the fundamentals for Paladin. I don't think we need to, because it's not gearing up for a buy anytime soon. I have said in the past, this is one of the most exciting explorers out there. It probably still is, but that excitement tends to wane unless we get movement in the uranium price and we get some good results. And I'm guessing we haven't seen much in the ways of that. I can go a hold. I'm certainly not a buyer at this stage, and as long as it stays above there, we're okay. What could turn it into a buy? We need to see some volume down here, some significant interest coming in, and we would like to see it sort of deal with this long-term downtrend zone. I'm obviously not going to do all of these stocks. I'm just going to cherry pick a few of them. Aura Energy, which was the best chart uranium for a long time, that's tanked. I'm guessing something has happened there on the operational side of things. I can't call that. I certainly can't call it a buy. I can barely call it a hold. And you're really struggling on that one. If anything, you're probably more thinking about getting out on the rallies than anything else just there. And I hope that changes and improves. Deep Yellow is an obvious one to look at as well. Another company that has huge resources as well, but needs to turn them into actual production and economic production as well. This one actually looks half decent. I think there's a little bit of volume, a little bit of interest coming in here. So that's catching my attention. We're seeing a little bit of price action to the upside again, so higher troughs, a little bit of a double bottom, and the candles over the last few days that uranium price has been popping up have been half decent. Could I buy it? Look, it's not me. But certainly I can say you would happily hold it at this stage. And if it was then to trade back beneath here, then I can't see any reason to own it. But you can see with this long-term downtrend and the short-term trend, hardly bested at this stage. It's not going to be one that I'm going to get too excited about. Look, if it starts to do some more of this stuff, maybe you could add a speculative 1/3, but it's certainly not more than anything that's speculative at this stage. I might just do. I'm just looking down the list and remembering what I can remember about these. Last time I looked at them, Peninsula, I know it's got it's got a resource at least. I'm pretty sure they were at sort of DFS stage. As in at least they're not just kicking over rocks in the desert trying to find the stuff. Looks half decent. Maybe if it got above 17 cents, or close above 17 cents, and if the volume continues to tick along, there's been a little bit lately, but not that much. I mean, if you saw this sized move in volume over here and a move above 17 cents, then I think, you could probably add 1/3 on that, but not until then, just so I don't confuse myself next time. Move above that, then you could It's not going to let me catch that one. There it is there. And I don't think we need that anymore. And Silex, which is not really looking for uranium, but rather finding ways to process it better. It's interesting, isn't it? Bit of a muchness through there. And this is why that can move. I mean, this is why I think you need to look at it. So do so, continue to watch it. And I think if you saw something that looked like this and you saw the right candles, unfortunately they've already been drawn for me in sort of that area there, then it could be a bit of a specky buy. But I'm then looking at this area here and saying, well, maybe there's even more work that needs to be done. But you would have to see the almighty bestest of bestest candles. And again, some interest. You can just see how interest dies down. It just sucks the life out of these things, even when they are big stories. Nothing kills a trend like just volume just disappearing, because all of those eyes and all of that money has gone to the next shiny new thing. But you can see sort of through here how it could build up again. So keep an eye on it. All right, that's my uranium overview. If you didn't get if the one you wanted to see wasn't in there, well, ask the question next time. Bannerman looks pretty terrible. I can't see any reason really to be an owner of that. And if it starts to get beneath here, you'd be exiting again. And did I really leave anything out? I don't think so. Did I? Anything that's worth talking about? Ask me in the questions. Elevate. Half decent, maybe a bit like a Peninsula, but not getting me too excited here. Okay, let us keep moving. I'm going to head over now to WA1 from Perry. And we are here, which I know I tweeted about yesterday. I mean, it looked great there through 3. It's one of those that's, nice chart, nice trend, nice candles. It's not something I would have bought yesterday, to be fair, just because of its distance from the light green zone. As you know, I like to find the white candles, the price action near the light green zone. But certainly if you had it, you would hold on to it. The question then becomes, well, what do you do on a candle like this? And that is a concerning candle. I'll just grab another update for you. I get updates from this data provider at 20 past the hour. So we will get the 1 p.m. update. That'll come through in the next few seconds. And you can see there's the supply. Isn't that interesting to see how that update? Because we saw the supply was there already. And then you just see there's even more supply. So it's kind of getting to the point here where if you've been riding this trend, if you've been lucky enough to be on it, that candle is starting to look more and more like a compulsory minus 1/3, okay? As a significant supply event, a long way away from the green zone, exiting 1/3, but it does mean you still do have 2/3. So I'm not saying you dust all of it, because the trend is still pretty good. And there's every chance we see something similar to what happened here, and then maybe it does go again. But I just think the prudent thing to do, given the run it's had, would be to knock out 1/3. Now, there are some caveats on that. Basically, this is a live candle. It's still trading. How do I know that this doesn't, the demand doesn't come in from literally as I'm speaking and push that close? But you've got to remember right now, the close of the candle is there. Okay, that's the close of this current candle. And if we can push that close up and up and up, right, back to the high, right, it's not going to be a black candle with a big upper shadow. It's going to be a white candle now with a bit of a lower shadow. Okay, so you can really only make this, you can only ascertain whether this is a supply event at the end of today's trading. And I usually like to do that sort of, with 10 or 5 minutes to go, okay? And then you can make a call. That way you're not trying to fight the rush tomorrow when people who are doing their end of day analysis see that candle and want to get out in tomorrow's open. And look, just one tiny comment about this candle, because it is relevant. It's worth talking about, and I only need to do it once in each session, and then we can move on. But this is the one I'm talking about here, and it's so important that you understand the importance of this candle and how it relates then to its best buddy, which is this one here. And much like we talked about the demand side candles and the demand buddies from before, these are not demand; these are supply side candles. Okay. And they are our supply buddies. And the whole deal about this is that at the start of the day, you had excess demand. The only way you can get from here to here, okay, is if you had early in the trading session demand. okay? The only way you can get back down, right, to the bottom of that trading session, not sure why I lost my caps lock there we go, is to have the excess supply come in, okay? So that is from here all the way down to here, okay? So we are seeing the transition between a market state of excess demand early in the trading session to a market state of excess supply by the end of trading. So on the way, and the other big problem here is on the way up, all of this demand, okay, all of this demand. So this demand here, okay, think about how they feel. So this demand here, think about how they feel by the end of the day. And we've all done this. We've all been in this position, right? Think about that demand. Like right now at the bottom of that candle, they feel pretty lousy, don't they? Okay, and they're in at whatever price is up the top here. Let's say it's $3.20. Okay, and now the stock's at $2.80, and they're staring down the barrel of a pretty nasty loss. And they won't get out now, of course, because the stock's been going up, whatever it is. They've heard the story. But I tell you what, if you gave them 320, if you said, look, I know it's 280, but if I'll give you 320 and you have to promise me never to trade the stock again, boom, they will take that 320. They will take their break even and get the hell out. So the problem for this point up here, the top of that shadow, which is, of course, what I'm talking about is the top of this shadow, right? This one here, yeah, it creates a massive, massive area of latent, not latent as in, come on, latent knew it, but latent supply. Okay, it is motivated up there. They want to get the hell out and undo their mistake. And the bigger that shadow, the more suckers got dragged in that ended up disappointed by the end of the session. Okay, they are trend killers, make no mistake. Watch out for those candles. And really often you see the next day ends up being this one here, right? This is your next day, because really this is all about excess supply. There's no transition on this day. It's just all excess supply, right? The first candle, if we call this candle 1 and call this candle 2, candle 1 is all about the demand exhausting itself and supply taking over, and then candle 2 is just all supply. Supply is now in control of the price, okay? I know we spent a bit of time on that, but hopefully we learned a little bit along the way as well. LIN is something I do want to look at today, and are we getting the same sort of candle on that today, Perry? It's not as bad, is it? I mean, it's still much stronger. It's one, I think last time I told you, not to enter a third, it seems, but maybe down here, I'm not sure. But it's one we've told you to look at buying in the past. Do we sell it today? I don't think this candle yet is as bad. And here's the thing, this is how you work this out, Perry. So we're going to look at candle 1 and candle 2. So we call this candle 1 and we call this candle 2. We talked about how bad that last candle was. Now, if you blend candle 1 and 2 together so that you have a common open, a common high, a common low, and a common close, okay? And candle 2 is still dynamic. You want to do this at the end of trading today. What we're going to end up with is a candle that looks like this. Okay, and this is why you don't need to know 100 Japanese candlestick patterns. You just need to know, it's not what I want, you just need to know 2 candlestick patterns, the 2 I've already shown you. So I'm trying to get it as accurate as I can, and it's going to be about there. Okay, so if we blend these 2 candles together, we get a candle that looks like this. Okay, and I would put to you that, is this a candle that you need to worry about? Is this the candle here? If we call this candle 3, which is the blended candle, is this the one we need to be concerned about? Okay, and at this stage, it's not great, is it? It's not great. That upper shadow also shows you we're going from a period of excess demand to a period of excess supply. But demand here is still hanging on. Okay, now do you want demand hanging on, or do you want demand being really forceful? No, that's up to you. I don't think it's enough. Candle 3, the blended candle 3, is enough to call it a minus 1/3 just yet. But watch what happens as candle 2 gets bigger and bigger and bigger, right? So let's say candle 2, hypothetically speaking, closes down here, It might not let me do it, but we'll get the picture in a second. So let's say that ends up being a full black candle. Okay, that looks like that. Well, what it does is it takes that open and it brings that down to here so that now the candle ends up looking like this. Okay, and that's a far more bearish candle. Okay, the demand is not hanging on anymore, for example. Okay, demand's pretty much giving up. And that then would constitute for me something that is more likely to be a minus 1/3. But that's not what we have right now. So let's just see how that one closes. Okay, I'm going to keep moving and moving very quickly now because I've got so many suggestions to get through and I do want to get through them all. KAU, this one's come through from Jeff, who follows me on Facebook. If you don't follow me on Facebook or Twitter, certainly get out there and do that right away. And KAU, which I looked at it and I thought, oh, another crappy little mining company, Jeff. Don't waste my time with this. But then I sort of looked at the end and I thought, well, actually, I don't mind this volume coming in here. Like, I think there's something going on here. That's interesting. And I don't mind the recent price action has improved. Okay, and this is a super sketchy chart. And I'll talk about how sketchy it is in a second, right? And I don't mind some of the white candles, and the short-term trend is turning up through here, and the long-term trend is trying to turn the corner as well. And it looks like from this point of demand in here, right, it at least looks like the old, resistance, the old supply that the, I should call it really dynamic supply, right, that zone has been offering in the past. When you try and go too fast, you end up doing typos, don't you? So that dynamic supply there and there, and really starting to dissipate through here, wasn't it? Because we did spend some time above it. Maybe that dynamic supply is starting to turn into dynamic demand down here. And I think there's enough in it to say that that's happening. Okay, it's early stages, but I think there's enough in it to say that that's happening. So I can give it, a pretty warm, 6 out of 10 probably. It's losing points because you can just see how sketchy the candles are. And that's just telling me it doesn't trade very much. It's very liquid, and it really will take a lot of interest to come in from the market to solve that problem. The other thing which I obviously can't do, and I have checked this before, Jeff, I promise you that the spreadsheet doesn't have any broker coverage on it. That probably doesn't surprise you, Jeff. But I did get me curious, and I went and had a quick look at some of the things that this company does. That's not it there. That's one I want to talk about soon. But Kaiser Reef is the name of the company. And I thought, oh, yeah, look, there's literally 1,000 million little gold stocks out there. I bet it's just kicking over rocks in the desert. And then you go to the ASX announcements, of course, and this you can do this. I'm so give you a bit of an insight into how I can, in about 4 minutes, ascertain whether there's anything here to concern yourself with. Quarterly activities report and cash flow report is a must-see for these small companies because it's telling you whether they have any revenue at all, and how that relates to their costs, or they're just burning cash and how that relates to how much money they've got left. So that's usually a good one to click. You might want to try and find a presentation, because usually they'll talk about a couple of other things that are pretty important. I'll talk about in a sec. This actually happens to be the half-yearly report. And here you can skip over the first 42 pages and just Google statement of cash flows is probably sufficient. And I like to look in here. And that surprised me, that shocked me. And I thought, okay, well, wait a second, something's wrong here, because these guys actually have revenues. So they're not just kicking over rocks in the desert, they're actually selling some gold. And in the quarterly, that would have confirmed the same thing, but I just happened to go the half yearly first for whatever reason. But yes, there you go. So that's good news. So we're not, I'll give you some words to watch out for in a second, because I want to head down here. Again, skip all that stuff. It's kind of irrelevant. But the quarterly cash flow, their net positive cash flow. So this is cash flows from operating activities. Don't worry about the other ones. They're not relevant for you, okay? This is the important bit here. So find the 4C. It's the appendix 4C. That's the one you're looking for, right? Scroll down till you find this bit. And we want to see this as positive, because obviously they're actually starting to make some money over their costs. And then we're looking at production costs, staff costs. That's pretty substantial, but they are mining, so that's probably fair enough. And then we're looking at year to date as well. And then we head down a little bit. That's the only other bit interesting, is how much cash they've got in the bank as well. So not only do they have cash in the bank, they're actually growing that cash. And that's very interesting. So I thought, yeah, not your average little gold stock kicking over rocks in the desert. Now, I'm not here to say, well, this is the one you're going to buy. I've done the analysis on the chart, and that's all that matters to me, right? But I'm just saying, when you're looking at these little ones, these are some of the things you do want to see. Some of the things you don't want to see, rock chip samples, okay? Field work in general, desktop analysis, okay? Rock chip samples means they're literally on foot, walking through the desert, chipping away with the little hammers, the geologists there, chipping away at bits of rock to take back to look at under a microscope, okay? That's field work, they're pegging stuff generally, okay? Desktop analysis means they're not even out in the field. They're just looking at stuff on their computer in between checking their Facebook and Instagram, okay? So if that's all your little mining company is saying, that's when you want to run a mile. The other reason why you run a mile is when you get to here and you can see that they are burning cash at a rate that is going to evaporate their cash balance within the next few quarters or even within the next year, because that screams capital raise is on the way, okay? Now, I'm going to go to this one next. I'll do this chart next. This was a request from Adrian, also follows me on Facebook. And a couple of things you want to watch out for. So again, just head to the ASX announcements. I like to look at change in directors' interest notice. I want to see them buying on market. That's usually a pretty good sign. But here, these are the words you want to see. And I'm not advocating buying this one here, Global Lithium, because the chart will tell me that. But ticks in the box, right? Large-scale exploration programs underway, okay? We've got drilling. It's happening. Now, drilling means results. Results could be good or bad, but at least they're doing something. Other stuff, what is this here? This is it's just an ASX announcement. This is there. You could see a 5B as well. It could be a 4C or a 5B. 5Bs tend to be energy companies. There you go. I wonder why. Maybe lithiums, or maybe previously it was oil and gas. I don't know. But 5B, 4C, same. And we get to here, and they're not making money. They're burning cash, okay? Well, that's not great, of course. But when you're exploring for stuff and you're trying to get to mine, of course, you're going to be burning cash. We get that bit. And you can see how much cash they've burned over 9 months. And if they do this again, you're probably looking at least sort of 16 million a year that they're burning, all right? Some of it's exploration and valuation, that's okay. But then we head down, we say, okay, if they're burning, let's call it 15 million a year, okay, that sounds like a lot, but okay, we've got $70 million cash in the bank. So we've got 4 years at this current run rate. So that's okay. They're not going to be looking to raise any cash anytime soon. And again, I've just skipped past all the corporate stuff and all this stuff that, I'm just trying to give you the key words and the key things you want to pick out. The other thing here I'll point out is this here, progressing to definitive feasibility study. Now I'm starting to get interested, I'm not just skipping over this and going, it's just another stock kicking over rocks in the desert. So you've got your scoping study, you've got your pre-feasibility study, you've got definitive feasibility, which is basically going to get you to a final investment decision, go, no go. And then you've got your bankable feasibility, which is we're actually going to be able to raise the money to build the damn mine. So things which showed, I promise it's not the right words, but just the key words you want to find compared to the keywords you don't want to find. And we digress, but GL1 there, Global Lithium on the chart, how's it look? Look, half decent. I know the rest of lithium has rallied a bit. It's one we've looked at in the past. I reckon I said something around about here where I said, well, it's got to get through there. And in fact, it's actually done some of the price action that, I say I do want to see. And I draw so flippantly on the chart, don't I? But it is something for you to come back and do your homework and say, well, did the price action do what Carl suggested? And, it's not terrible, is it? So here's your demand zone. We are seeing a little bit of supply where we expect to see it. And for people who own Gallon and all they know about is the fundamentals, they're scratching their heads and they're going, why the hell did Gallon hit around this high here, the high there? Why did it get to around 166? And why is it struggling to get through 166? And they're going, it's pre-DFS, it's got great hard rock lithium deposits over in WA, it's got plenty of cash in the bank. Why all of a sudden are people selling at 166? Well, that's where you need to look at the chart, everyone, and say, well, that's where the dynamic supply zone is kicking in. And we know that it has been demand in the past, and it's probably going to act as supply in the future. So look, I can go a hold on this one. There's not enough in it for me to call it a buy. I won't go to the brokers because there's no broker coverage, okay? But an interesting little diversion there. I'm going to head back to how we're going for time. Not great as usual. James Hardy from King, JHX, looks half decent. I think that's what we said last time. I'm not sure if we said add a third last time. I'm not sure if we were at that stage, but I think it's getting closer to it. And this chart reminds me of the NASDAQ, and there's a good reason for that because the NASDAQ is so US interest rate sensitive, and as is James Hardy. The odd thing is that, I guess this is a play between interest rates obviously have gone up substantially. That does hurt what they do, which is a US housing market. And that could cause a recession, which is going to be even worse compared to the fact that, well, the market's kind of factoring in some rate cuts down the track because there's potential recession. And also, I don't know, maybe that's the other thing. They're fighting it between that and this idea that the US consumer is still very strong, and they've actually refinanced a lot of those mortgage rates at very, very low prices back after COVID. Look, they're all fundamentals. What can I say? The chart looks okay. I can buy it on a close above this high here. And I'll tell you what that level is in a second, King. So that high there is 34.73. So I could go plus 1/3 on a close greater than 34.73. And until then, look, is it so compelling right now, just upon the candles and the price action, which is really squishing up into this point of supply? And that's okay. We know there's a point of supply, and we expect it to squish up. So that's all good, because this is good and this is good. Okay, is there any reason to buy it before that? I'm not so sure. You'd have to be, kind of super. Is aggressive the right word? So I don't know, super aggressive to go plus 1/3 here. I think you are. Okay, that's just my opinion. Let us head over here very quickly. Not there. Yeah. Rushing, and go JHX. And we are going to have 14 broker estimates, obviously well covered, a company like James Hardy. 5.4% average target upside, 2 strong buys, 8 buys, 3 holds, but polarizing, 1 sell, and in fact 1 strong sell. EPS line is at bottom left, top right. Look, it is, even through the pandemic, even through the supply chain chaos, even through rising interest rates. And is it going to continue? Not really. We've got a bit of a speed bump through here, but then back to some growth. So 24 is a bit of a dip, 25, 26. So the net growth is actually pretty good, 11%. Can't complain about that. I do need to make sure, actually, before I confirm, that we've got the right end of year date. You can see how that changes your growth rate, and it just is the way it is. So we're actually at 3% here, which is below market growth. You could well leave that at moderate, because I think the risks facing James Hardy are at least moderate, but let's just stick with the default setting there, and we check out what the dynamic FPE, so future PE, we look at the median going forward is about 17 times. Would I pay 17 times earnings for something that's going to give me 3% compound annual growth rate? No, I wouldn't. And that's why the model is saying, look, this is at best fair value here. And my model is saying, look, there's not a lot of support for prices much higher than where it is. Now, the brokers think there is, and let's defer to the brokers' better wisdom. But my spreadsheet is not liking James Hardy all that much. Okay, let us head over here. And I must get to, I've done those. I'm going to do CXZ, and it's only going to do this very quickly because it's a super, super sketchy chart. Look, the question is, are these black candles coming in here enough to get you out? Look, I think there's enough for me after the run it's had to go minus 1/3 as a precaution. And then I would say if it's starting to close back beneath 2 cents, so I'd go less than 2 cent stock, by the way, then you're at the very least getting out another third. Until then, sorry, I shouldn't say until then, because I think there's enough in it to sell a third. But until it gets below 2, just the third. perhaps. Otherwise, it's not terrible, is it? You've got this, but this is a question mark here. There's just not enough interest, and it's the most sketchy of sketchiest chart. I don't know what they do, and honestly, I'm not going to go out and investigate what they do because the chart is not compelling me to do so. Sorry, French on Twitter. I know you probably wanted a better view on that one. Neuren, okay, I'm glad we're looking at this one. This one's from Martin, also on the Twitter, and do we have problems here? I know it's one we've been very positive in the past. Usually when you have, you're holding up here with those candles, you should get going again. It's frustrating it hasn't. Should we maybe just sell a little bit and just keep a little bit? I'm not averse to that. I'd be watching for this little trough low here. And let's say maybe that's even jumping at shadows, but I just think it's taking a bit longer than we would like. And if you've been in it, that sense of anticipation that you had as well. Don't forget, other people are feeling that. And each day we're not getting that follow through move. They're getting a little bit tetchier and a little bit tetchier, and they're starting to just sell a few, and then the next person sells a few because they want to go chase that next shiny new thing. Okay, so I think we kind of have to just defer to what the market's doing. So it's taking a bit longer, just in time. And if it starts to close beneath that low there, 13.59, then minus 1/3. And it's just a bit of a precautionary measure, because if it starts to pop up with a white candle, we might miss 50 or 60 cents, but we could always get back in. And I'm only talking about, a partial exit here as well. So I'd go close less than 13.59 equals minus 1/3 for me. Okay. Otherwise, holding. It's not a straight up sell at this stage, and it's not a buy either, clearly, because the last couple of candles are telling us that there is some pesky supply in the system, and why aren't they true believers anymore? Okay, it's maybe just a little bit more than profit taking at this stage. It feels like there is you've got a fund manager that is just kind of sitting on it. So a fund manager that, let's face it, got in at a very low price, and they don't care so much what their sell price is, and the market needs to work through. Either they'll work through the supply from that fund manager that's just sitting on there, the programmed order, just selling it out every day. That's their intention. They own 6% of it. They want to get to 1% of it. That's what it looks like to me. So it's hard to fight that sometimes. CKF looks half decent. It's one I think, put in my shortlist not that long ago, because I was seeing some of these candles through here. I like these candles. I like that one. I like that one. I like that one. I even like that one. I don't like that one. I like that one. I like that one. It looks pretty solid here. And look, obviously this candle here, let's call it candle 1, is the big problem. The good news is we did test it today. Look at today's shadow, but unfortunately we kind of saw our proverbial shadow and have run away a bit. So that's a problem. And I do think that this supply here is something which needs to be taken out before this has any chance of going higher. But the good news is, it's starting to feel like a bit of an MPOS, and we've had a test here. This is a good test. So first test of that. And let me say that I would be comfortable adding some risk to this one, because I think the next point of supply is a ways away. I mean, even if we go down to $10, I think we can probably get a 1-to-1 working with a stop somewhere sort of around here. Okay, and if our entry is somewhere around sort of here, can we fit that one? We can fit the 1-to-1. So let me say on a close, and let me give you the level there. That high is $9, and if we say on a close greater than $9, then I could go plus 1/3 on that one. Okay. I don't run out of time on doing the fundamentals, everybody. Apologies. So I just want to get through as many of these as I can today. BKT is the next one, which I'm going to do quite quickly here, because there's not a lot happening down here and there's very little happening in here. We do have a very clearly defined long-term downtrend. There's just no spark here. And I wonder if I went to look at the ASX announcements for BlackRock Mining, and the person who asked me this, which was Market Man on Twitter, you can do that now given the information I've given you, and try and find those keywords, the keywords you want to hear, and then obviously, if you're hearing more of the words you don't want to hear, like rock chip sampling, running a mile, and there's no signs of drilling. There are so many crappy little mining companies out there that will never come to anything, ladies and gentlemen. And all they will ever do is burn through shareholders' money, hand over fist, day after day, month after month. Because at the end of the day, it's quite expensive if you are a mining company executive to own a house over here in Claremont, Nedlands, Cottesloe, Dalkeith, or Peppermint Grove, which is invariably where the people who run these companies live. Now, let us keep moving there. Ramelius for William. Nick, I'll try. I'm going as fast as I can. Now, Ramelius Resources, we've got a little bit of a problem here today. I'm just concerned about, obviously, POS here and POS here. Look, it's not great, but it does give us a clear-cut point where we can say with confidence that if we close beneath that low, we're in a bit of trouble. So that low there is 128, and I would say close less than 1.28 equals minus 1/3 compulsory. And if this starts to be a really nasty candle, it's not yet, but let's say it closes, sort of below 135, that's going to be nasty enough to probably go, and I don't even say close less than, say, 135 would probably just a sneaky little 1/3 there. Otherwise, if it continues, well, maybe I'm being a bit premature on that one because we do have the light green zone. Look, let's get rid of that one and just stick with that one. Okay, and it's a hold in the meantime. Is it a buy? No, because of the POSs are concerning me. Okay, the falling POSs are concerning me. But we'll give it the benefit of the doubt for the time being. Let us head now to APX, which is Appen. Showed some signs of life, but we are seeing it's frustrating with these, and I feel your pain because it's something I want to trade because I think it can go when it's time. But I just see these, and it just tells you that there are fund managers out there that just are waiting to die. God knows where they got in, but they're just still trying to get out. So I'm worried about those candles. And what it does, I think it gives us a pretty clear point, though. If we can close above this area here, which is where that supply, where that it's probably literally just one fund manager that's responsible for this. But if we close above that high, we can say something like close greater than 3.32 equals plus 1/3. Until then, I think you can hold it. I'd start to be concerned if we did get a close beneath this level here. That is worrying me a bit. So that low there is so close. Let me type just yet. There we go. Close less than 301. Let's call it $3. Let's call it. Let's go. Let's give it the round number. Let's say 297. So 296 or worse. Then that would be minus 1/3. Okay. I thought it was going to go. I thought it was going to move, but yeah, it's sometimes for something that's been so terrible for so long, it's hard to get the true believers back. I'm just going to do one of yours, Kimberly, obviously given time. Hanelli's asked for Harvey Norman. I'm going to get to the live streams next. Actually, half decent little rally there, Hanelli. I can get to a hold. I'm not a buy. Okay, but I can certainly get to a hold based upon those four last candles there. Look, I would say that that grip on the hold is under real pressure if we close beneath that low, and I'll let you figure out what it is, because clearly, this should be the most major point of demand, which equals if broken, right? Seriously, watch out below. Okay, this one is in big trouble. I've lost my caps, but it should be in caps. Okay. Now I want to get to the ones that Nick's banging on about there from HA C6C. Let's have a look. Copper stock C6C 6C looks good. Yeah, look, I like this one. I'm happy based upon what I can see to go plus 1/3 on this. So let's go. Assuming that candle stays roughly where it is, I like it. I like the turnaround. So I like this. I like this. I like the fact that we have bounced off this. I know the price action not ideal yet, but this has taken us above this. That's good. Yes, there's a bit of point of supply up here. Okay. Yes, I can see it. I'm not blind. I know it's there, but I like everything else about it, okay? Looking up, the next big area of supply, probably around there. I think reward to risk looks good. I'm happy with that. Maybe there's a bit here. Would that keep me out of it? No, I don't think it's going to keep me out of it, but I'm happy to dip a toe in the water. And that's really all I'm talking about here on the opportunities that we do like, is adding a little bit of risk. Now, it is possible that that toe gets chopped off, okay? But it's the reason why we just start to add a bit of risk. We don't know what's lying underneath the surface, and we can always add more. This is why we add a bit as we go, so that when we close above that level, that's where we're adding a third. And there might be some other great candles that get us another one, or it might only be until we close above that level that we get that next third going, okay? But I think that looks pretty good for me, AJ. I won't do your other one because we're running short on time. I need to get over here to LLL, which I know won't come up straight away. I have to find the darn thing. There it is there, Lithium. It's okay. I'm pretty sure I put this out on the Twitter a couple of days ago. I reckon it was this candle here that got my attention, and I like that. I think that was starting to look good in terms of just sort of building back up the price action. We do have a point of supply that we're going to be concerned about here, and this is more of a trade. I don't think this is in it for a long time. I think this is more in it for a good time. And if you can kind of hit it at 56 and sell it at 66, that might be the trade on this one. But watch out. Obviously, whilst the candles are white, we've got demand side buddies. That's all hunky-dory. But if we start to get the ones that we don't want to see sort of up and around here, then that's where you would start to take some profits. Buy, hold, sell right now if you're not on it. Look, I think it's too close to that point of supply to call it a buy. Okay, but certainly there's enough in it there for me to call it a halt. Okay, so they're the candles you don't want to see when you get up to that supply zone. Okay, but happy holder in the meantime for you, Philip. Davis has got LEL, which I've drawn a few arrows on this one in the past, and I think what I might have talked about in the past was the just the black candles. Well, we've got some white candles coming in. We can get rid of those because I don't think they're all that instructional. And I reckon it was one that I said to you, and I reckon I can quote myself here and say, look, at this point here, which is usually when you ask me about them, right there on that day, and all I can see is this, right? And I say something like, I think that's the worst looking chart on the market. I mean, it just looks bloody awful. I can't buy that. I'm not even close. It's just the worst thing ever. And then I cover myself and I say, well, look, I can't see the future. All I can say is that somebody has been selling every bloody day without a care in the world. And there's just hasn't been enough demand in the system to get in the way of those sellers and stop the price from going down. And I cover myself by saying, look, the next day it could start going up. I don't know. And lo and behold, that's usually when it does start to go up. There it is. Looks like news to me through here. And I can't tell you when the news is about to break. We even got some volume. So definitely some news that's changed the market's thinking. But I think it's only temporary. I'm concerned about this. This worries me, the fact that we're up to the pink zone, we're starting to head back down with a few of those black candles. And if you see those black candles start to perpetuate themselves, I think you're still in this stuff. And whoever, they're just taking advantage of the fact that they're getting 75 cents now, not 55 cents, and they're quite happy just to continue to dish it out. Buy, hold, sell. Look, I go a hold on the basis that the white candles and the volume are telling me there's a chance it could go back up, but I'm 100% not a buyer. And the only way I can become a buyer is if it closed definitively above there. But even then, I'm probably still not interested because I'm going to see a bunch of supply coming in around there as well. Where does it not become a hold anymore? I'd be watching for a move back beneath that, and I think you're in big trouble because you're probably heading down there. Okay, let us head to Mesoblast. Oh gosh, when are people going to stop asking about Mesoblast? I've been investing for nearly 30 years. In November, it'll be my 30-year anniversary of the first share I ever bought. And I reckon for most of those 30 years, Mesoblast has been a listed company, and it's had promise along the way, and it's never done anything. But let us analyse it anyway. Okay. There's some good stuff here, right? This is good. I like this candle. I like the shallow pullback. But this is going to be a trade, right? I don't think it's any more than that. And look, could I buy a third? No, I don't think so. Look, Don't get me wrong, I love that candle. I think that candle was brilliant. And I think the fact that it had a very shallow pullback just into the top of that candle and went again, I think that's amazing. And I think today's candle is extremely encouraging. And that's going to allow me to get to an emphatic hold. Okay, but I don't think I'm going to be the one that tells anybody to buy this here. If you are the most crazy, aggressive, crazy person that just loves pain, and you're into pain for a long time, then certainly buy Mesoblast. If you're not any of those things, then keep moving. That was for you, Hugo. PRU from Buzz Lightyear. No, that's not it. It'll come up in a second. PRU. Oh, talk about pain. This... again, and I keep reiterating, this is the problem with owning gold stocks when gold's going up, is they continue to disappoint you. You have to wonder why, given gold, I know gold has a pullback every now and then on a particular day, but it's still above $2,000 an ounce, right? Last time I checked. In fact, let me check it and confirm for you that that's the case, because I'm pretty sure that's the case. I mean, that still looks fine, right? And you can see here, this little patch through here, right? What that meant for PRU was something so much worse. That's hard work. And I'd almost just sell it just on the basis of how hard this is and go find a better gold stock out there. This is really tough. This candle here is half decent. Not that candle. That candle there is half decent. But look at today's response. You get a half decent candle in the next day. This just smacks of a fund manager or a group of funds. They're just selling. They want out of this, and they don't care what's happening in the broader market or with the gold price. They just want to get the hell out. That's what it looks like to me. I'm going to, as much as it pains me, I reckon I might end up agreeing. But I'd say minus 1/3 at the very least. It's still holding the long-term trend. It's done it to us in the past, hasn't it? Look, minus 1/3. And again, I almost can't even spit those words out. ABB. CDA, which I know it's done really well. I think I started tipping it in my tweets around about here. Correct me if I'm wrong. Tin. Okay, hopefully that's where you got onto it. And I've tweeted it probably here, and here is my feature chart of the day. I think you can hold on to it. Today's not ideal, but it's a smudge, isn't it? It's a smudge of supply in what is just overwhelmingly good demand. Keep an eye. Look, if it gets worse, you might want to do something about it. But I wouldn't have to. For me, I wouldn't be flinching until it closes beneath that. So if we go close less than 724, then you can think about going minus 1/3. But until then, we are a happy holder. And again, I don't know the future. I don't know if you've figured that out yet. I don't know what's going to happen next. All I can do is look at a chart and tell you what supply and demand thinks. And we're going to go to MAY. Tim's got another one there. That's the Yank holding, not that one. There we go. Melbana Energy up. I should have covered this in the. I think it is still a uranium stock, isn't it? Dr. Bullion, or did it become a lithium stock? Probably became a lithium stock. Look, it looks fine. Happy holder. I nearly put this in. Actually, I nearly put it in. Maybe I did put it in. I can't remember. Did I put it in my tweet yesterday based upon that? But if I didn't put it in, it's because of this supply zone here. I just think that's a major loss. That could you really be bothered dealing with? And Dr. Bullion's going to say, "Hey, Carl, you really should look at this. They've got an amazing project. It's going to be amazing." And did I say it's going to be amazing? It's going to be amazing, and it's going to do amazing things. And I'm going to say, you know what? Maybe. And if it was that amazing, Dr. Bullion, everybody would be piling onto it right now. Nobody would be selling it. This is not the worst chart I've seen. I think actually it's very good, but I don't think there's enough reward to risk in it for me to say plus 1/3 just yet. And you know what needs to happen. Now, I do want to get to EMS for Tim. In fact, there you go, Tim. Nothing more needs to be said about that. I think, Tim, that we don't need to say any more about that. I want to try and get to the bottom of the list here. So stop typing in new ones, please, everyone. Carlo, you've given me about 6. I can do one of them. PLS. Let's do lithium, because I actually do want to talk about this today. So as you know, we were super bearish on it through sort of here. I think I officially went on Ausbies not that long ago, or a couple of weeks ago. We said hold, and now, in fact, if you've been watching my tweets, I've been saying, look, you can add some risk. I did tweet at this one yesterday, and I said that watch out for 479 and watch out for the candles there, particularly the black candles with upper shadows. It hasn't covered itself in glory today. I do think it is manifesting some supply at that level, but I don't think it's serious enough just yet to exit. But keep an eye on this. It's a work in progress. I won't draw the candles again, because I can just point to them. If you see that candle in there, then I think you need to take some profit, okay? Apart from that, happy holder for the time being. I think this is a trade. I don't think this is the beginning of the move that takes Pilbara through those all-time highs. That's just my hunch, but happy to trade it. I've also tweeted quite a bit IGO, and even today, there you go. Okay, point of supply, $15. Supply is manifesting itself in the market. This is pretty close to me saying minus 1/3 here. It's pretty close, but the candle's still trading. So let me see that low there, 1470. Look, I think if it close less than 1470, then I would suggest minus 1/3 on that one. Okay, I don't know how much you put into it if you've been following me, but I think you're taking a little bit of profit here, and then it's just a wait and see. And what you might find is it does throw in the right candles in the light green zone, okay, where the old point of supply, that one there, starts to act as a new point of demand, okay? And if it throws in the right candles in there, you might well be adding back that 1/3, okay? But I think the right thing to do, just my view, is that we're in an area where we could find some supply. So be more attentive if you do see it manifest itself in the market. Allkem is another one I've been tweeting about. I like the setup here. I think this is fine. In fact, this has got the best candle. Look at this. Last time we said if it closes above 1260, plus 1/3. And I think this today might actually be the first time it's doing that. There you go. So that close there, you can see, is only 1248. It looks like today we're actually gearing up for a plus 1/3 on that, following up from the last time I might have spoken about it. So that looks like my pick out of those big three. I think we could probably make it a big 4 if we looked at core. This one's certainly a laggard. Looks like last time I spoke to you about it, I said hold. It's coming up to a big supply level here at 107. You can see it's clear as day. Yep, plain as the nose in the middle of your face. We're going to expect some supply here, and it's starting to manifest itself in the market. Look, I wasn't a buyer, and I don't think I'm a buyer yet, so I can stick with a hold. And I think, yeah, you are just looking at the most optimal point, I think, to get out eventually on these. And I know that is blasphemy to some, but it's just my gut feel, and I can't help what the gut thinks. I think I've got most of those mineral resources. I've been very bearish on this one, haven't I? And I don't think I need to change that. Is there anything in here? Oh, look, this look at it now down here. How do you feel? I don't know. How do you feel? This candle here is very good. And it is the only thing stopping this from a total oblivion, in my opinion. I don't want to be in that one just yet. How are we going for time? I think we're pretty close. And I know I've missed a few there, but as these sessions get bigger and bigger, we are not going to be able to get them all. Is there one left in the rest of these that is worth looking at? This one is worth looking at here, A4n. I still think it's fine for you, Therese. Maybe, Therese, you've got onto it from something I might have done or said. I hope so, because I think it still looks very good. More than a happy holder here. In fact, I can't see any reason why you can't continue to add risk here. I'm going to go plus 1/3 on that, assuming it closes that high there, 1025. So let's, 1025. I want to see it close to the top of that range. So 1.025 or better. Then we're going plus 1/3 on that one for you, Therese. I think that's probably a good place to end it on. And let's head back to here, where I remind you that, look, I'll be back next Tuesday to answer your questions, of course, but also on Thursday. I think that's super important, where we do the indices, commodities, forex, and crypto. I know probably about half the people attend but it's really something you need to take a look at, because it does really influence your portfolio there, the big macro stuff. And then the USA edition on Friday also is one you definitely should catch. As I said, follow me on the Twitter or the Facebook is another way to stay in touch with all of my updates. Why Think Markets? We are the good guys in the Australian broking scene. We have everything you need to trade on your ASX shares. Good old-fashioned buy and hold, $8, Chess and Hin sponsored. There are cheaper rates out there, but I guarantee that you won't get the service, and you're probably going to have to pay to put your money in and take your money out, and that is crazy stuff. We don't do that. We also have CFDs, so you can trade the big picture macro stuff as easy as you are buying or selling Pilbara minerals, market leading spreads, and commission free. If you're starting out with a small amount of capital, CFDs are a great way to get the most out of that capital, because you're not paying commissions, and you can use the power of leverage to make that capital work harder for you. We are an award-winning broker. We have offices all over the world, easy to use multi-asset platform, and the best customer service, I can assure you. Head to thinkmarkets.com/au. If you're watching on any of the streaming services, make sure you subscribe to stay notified of any of my video updates. I plan to do a few other bits and bobs over the next couple of weeks, just sort of planning those out. So you definitely want to be on that subscribe list on YouTube, because I don't think I'll broadcast them live, but you'll get the update when it does come out. And hit the thumbs up button to let me know you like what I'm doing, so I'll continue to do it, more of it. Apart from that, it's been a pleasure chatting with you today. Hopefully you got lots out of it. All the best if you're trading and investing until we catch up again. Bye-bye for now. But before you run away, don't forget that everything we've discussed today is general advice. It has not taken into account your personal financial circumstances or particular needs, so consider it carefully or seek the help of a financial professional. You can learn everything you need to know about Think Markets and our products by heading to our website and downloading our PDS.